Today I'm going to show you guys how to trade options on Robinhood. I will cover everything from how to place the trades, basic option strategies, the basics of the option Greeks, and more. There are multiple ways that you can trade options on Robinhood, including the regular web platform which you can see on the screen here, the Robinhood Legend Platform, and of course the mobile app. I highly recommend that you use the Robinhood Legend Platform, but first I will quickly show you how the web platform works for options trading. So the first thing that you need to do to trade options on Robinhood is to pull up a stock that you want to trade options on. So for this example, I'm going to be using the DIA, which is the Dow Jones ETF. And you can see I have it pulled up here. You just type it in the search bar and then click on it, and this screen will pull up. Now to trade options, you're going to want to click Trade DIA Options right here, or whatever stock that you're looking at. So once you're on this screen, you're going to see the options chain. And I know it can look pretty confusing, but let's break it all down in simple terms here. So for one, you're going to need to know if you're bullish or bearish. Bullish means you think the stock is going up. Bearish means you think the stock is going down. If you're bullish, you can either buy a call or you can sell a put. Let's just start with buying a call since that's the most basic. So when buying a call, the most important things to keep in mind at a basic level are the expiration date and the strike price. Now most people who buy calls tend to buy them with a strike price that is near the current price of the stock or at it, which is called the at the money strike, which in this case is the 443 strike about, since DIA is currently trading at 443 and 21 cents. Alternatively, you can buy an out of the money strike, which is a strike that is at a price slightly higher than the current stock price, which in this case would be the 444, 445, or anything above that. Now it's called out of the money since the stock has to move up and ideally above the strike price to profit. Regarding the expiration date, you're going to want to pick something based on the length of time that you intend to spend in the trade. Depending on the stock, expiration dates can range from 0 days until expiration all the way up to over 2 years. Now if you're day trading, you may want to pick something with a strike price that is 45 days or less. The shorter the expiration, the higher percent return you can potentially get, but you also have to be right within a few days or else the option can expire worthless. Longer expirations with 365 plus days until expiration are called leaps, and these are best for medium-term swing trades, which is quite a bit safer than something like a 0 DTE, but they also cost more. For this example, I'm just going to buy an at-the-money call with 30 days until expiration. So all I'm going to do is change the expiration up here to 30 days. And then I'm going to buy the at-the-money call, which is currently the 443 strike, by clicking on the plus icon here. And also just make sure you're doing buy and then call. And then click on the plus icon there. And this order window will pop up saying long call. So all you have to do is here is specify the amount of contracts you want to buy. For this, I'll just do 1. And as you can see, the pricing here is noted as 6.25, $6.25, and that's per share. And options have a multiplier of 100, so it's going to be $625 to buy this option. And yes, that is also the maximum amount you can lose. So essentially, if DIA is below $443 per share on the expiration date on January 10, 2025 in this example, this option will be worth $0 at the time of expiration. However, if DIA decides to go up to maybe $446, this option will go up as the price of the stock goes up. As you can see with the risk diagram here, it can show you an estimate of how much you can lose and win. So as you can see, the max loss here is minus $630, and the maximum profit potential is theoretically unlimited since the stock can continue up forever, but you can see an estimate of what they think it's worth in their option models. So once you have the amount of contracts you want to buy in there, I'm just have 1, you can put the limit price, and so you can see the bid and ask right here. So the bid is 610 and the ask is 630. So when you're buying an option, you're most likely going to have to buy at the ask. That's why it has the ask price right here. So it's going to be 6.30. So you're going to want to probably just set it to 6.30 there. You can select how long you want the order to be in. You can have it good till the end of the day or good until canceled. Then you just go ahead and click review order. And then once you're sure everything is good here, you can press submit. So now that I've showed you how to buy options on the regular web platform, let's go ahead and open up Robinhood Legend, which is their trading platform that I highly recommend that you use over this. So to open that, you're going to see Robinhood Legend right here at the top. Just go in and click that. It's going to open the platform here. And I already have a few layouts set up, but let's go ahead and create a new one for this video so I can show you how to build an entire new layout from scratch. So all you do is click the plus icon here. I'm going to do start from scratch. So for options trading, I highly recommend you use a setup similar to this. So first, obviously, we're going to put on the options chain. Then I'm also going to do add widget again and add a chart. So this way we can see a chart while we're trading. And then I'm going to add a widget called recent orders, which is going to allow you to edit and replace the current order, the option orders that you have placed. So you can set up and customize this however you want, but this is just something I recommend. So I'm just going to pull up SPY for this example. And then I'm going to make this options chain a little bit longer by just dragging it down. And I'm going to make this go a little bit further over here, which is our recent orders tab. So now that we have everything set up, let's take a look at the options chain right here. So actually, you can link these two because this one currently has the SPY ticker and this one currently has the Apple ticker. If you want them to always match, you can link them. I'll just do yellow over here, and then I'll choose yellow for this one, and this will ensure that if I change to, I don't know, Apple over here, it's going to change to the Apple options chain, so it's always the same. So yeah, let's actually just use Apple for this example. And let's just say I'm day trading Apple, for example. I'm on the 5-minute chart here already. As you can see, the price has come down. Maybe I want to place a day trade. I'll open a shorter expiration with maybe even 2 days to expiration right here. And then you can customize this options chain a little bit more as well. So you have the filters up here, and you can pick how many strikes you want shown from, all to 6, 12, or 24. If you use all, it gets a little bit laggy, to be honest. So I'm just going to use 24 right now. Or you can do a custom amount. And then you can filter how many expirations you want to see. I'm already on the 2 days, so that's good. And then right here is something that's important too. Under settings, you can customize columns. I like to keep my chain pretty simple. All I need to see really is I like open interest, delta, and that's really it, to be honest. So I'm just going to leave it at that, and the last price. Now I don't even need the last because the bid ask is good enough. So I'm just going to have it set up with the bid, the ask, open interest, and then the delta. Now let's say I think Apple's going to go up today, so that's why I'm on the 2 days to expiration, such a short expiration. So I want to buy a call. The calls are on the left over here, puts on the right. And if you want to buy a call, you're going to want to click on the ask price, which is noted in green. So right here you can see Apple is trading right there at 247.39. And so let's say I want to buy closest to at the money, which is the 247.50 right here. So I'll click on the ask price, and you see the strike price is in the middle, 247.50. I click on the ask, and that's going to pull up a similar order window as the last one. And right here you can see there's different order types. A limit is going to allow you to select which exact price you want to buy the option at. You can see the bid and ask right here is $1.42 to $1.43, and that's changing because the market's open. And so basically, if you wanted to buy this at a specific price, maybe one that's lower, maybe at $1.40, you want to try to buy at the bid, you can set this to $1.40, and it won't fill you on anything above $1.40. Alternatively, you can just do a market order, which is just going to buy it at the best price possible, which I don't usually recommend for options because it could give you a pretty bad fill. So I would probably recommend doing limit orders unless you want to be really quick. So let's just do a limit. We'll set the quantity to 1. We just want 1 contract. We'll set our limit price. We'll make it just good for the day. And then once you have all that done, you just do buy Apple call. So just to show you something real quick too, I'm just going to put in a lower price so it doesn't fill. Then I'm going to do buy Apple call to place the order. And as you can see the working order is right down here. So if your order is not filling and you want to change the limit price on it, unfortunately Robinhood doesn't allow you to cancel and replace it. So you just have to press cancel, and then you're going to have to go back to the strike, click on the ask, and then replace your order. Now to actually give you guys the full experience of, trading options on Robinhood, I'm actually just going to buy this option and see what happens real quick and show you how to, set stop losses or take profit orders. So I don't usually recommend day trading options, and this is definitely not financial advice, but let's just go ahead and try to buy this option and show you how to place the order. So I'm going to set the limit price to the current ask by clicking on the ask right here, which is $1.37, and that estimated cost is times 100 since options have the multiplier of 100, so it's going to run me $137.03, and you can see there's a 3-cent regulatory fee. So let's just go ahead and buy this Apple call, and as you can see my order has filled, and you can see the little +1 icon right there. So let's say you have a specific price that you want to go ahead and take profit at. Maybe, I don't know, whatever it is, you just click on, so to sell the call that you already bought, you're going to want to click on the bid price of the same option. You can see the +1 of the strike that you have right there. And so let's say you want to take profit if this goes up to, I don't know, $1.50. So I'm going to do a limit order, a quantity of 1 since I only own 1. I'm going to set the limit price to whatever I want, in this case $1.50, as I'm actively losing money. I'm going to set the time and force for just good until day, or you can do good until canceled so it doesn't cancel when the day is over. And then all I'm going to do is press sell Apple call, and that's going to place my sell order. And so I actually want to get out of this option. So let me show you real quick too how to set a stop loss. So I just canceled it. And to set a stop loss, since you bought one, you're going to want to set a stop sell order or stop limit order. And to do that, you're going to press on the bid to open up the sell to close order. But we're going to change it to stop market. You can do stop limit as well, but for stops, I always just go with market orders because you never know if it can just blow past your limit price. And so let's say, Apple's continuing to drop. We're actively losing money. You don't want to lose any more. So we bought it at like $1.35 or something, $1.33. Let's just say if it drops under $1.20, we want to stop loss out. So you will set the stop loss to $1.19. We have it at stop market 1. Then we're just going to press sell Apple call, which is going to be a stop market order. So right now we have, as you can see, the stop market order in. And if this option goes down to $1.19 or lower, it's going to automatically stop us out and sell it. But let's just say you're like, I'm tired of waiting. I just want to get out right now. So there's 2 ways to do that. Let's cancel the order. We'll click on the bid again to sell. If you want to get out ASAP, you can just do a market and then sell Apple call. If you want to try to be nitpicky and get the best fill, you can do a limit and set it for the ask price, which is currently $1.30. So let's just go ahead and do that. I actually just went up to $1.33. So let's just let's keep clicking on the bid, and then once you're ready, you have a price that you're happy with. You see it keeps going up and down, but I just want to get out of it ASAP. We're just going to set it for, the current bid, which is $1.33, and just do sell Apple call. And as you can see, the order has just filled and I am out of the option. And of course, this is going to work the same for buying puts. You can buy puts using the same methods here. Of course, buying puts is just a bearish strategy rather than bullish. And if you want to sell to open options, then instead of clicking on the ask first, let's say you wanted to sell a put instead of buying a call, you can just go over to the puts here. And if you want to sell the 245 strike, you click the bid. You use sell to open. set your order type. I always recommend a limit. Set your quantity. Set the limit price. When you're selling options, you're going to usually be able to sell for the bid, and then you can go ahead and do sell Apple put. And so this will differ for strategies, but that is essentially how you trade options on the Robinhood platform. So if you guys have any questions, feel free to leave them in the comments below. And I'm going to have more videos on different option strategies. And you can check out my blog at financialtechviz.com to see a bunch of articles about, cash secured puts, covered calls, poor man covered calls, and a bunch of good stuff like that. So thanks for watching, and I'll see you guys in the next one.